In today's video, I want to show you the trade that I took yesterday on Nifty. It was a options trade where I was bullish for the day, and I took a trade somewhere in the range of 11 to 12 and held it all the way up to the end of the day. As I have highlighted before, I'm an options seller. I do not buy options because in my experience it has not turned out to be a profitable venture when I buy options. Although the risk is limited, but the kind of time decay that comes in option valuation sometime, it can be very brutal. And even if we are on the right side, it can hit the profitability in a really different level. So, whenever I am analyzing any market from a trading opportunity, I do three levels of market analysis. One is the weekly, then I go on to the daily, and whatever is the bias on the daily, that is my execution, uh, the execution bias eventually, right? So, if we look at the weekly, what is the dealing range right now? The dealing range is somewhere in this area, which is around 22,050 to 22,150, and on the lower side after this week's close, earlier the dealing range was this, but now due to this candle's close, and we now have a swing low here, the dealing range is now between these two ranges. When I say dealing range, what that means is that the markets are right now trying to punch liquidity in these two ranges only. So either it hits the range above and it hits the range below, and basis that we either are bullish, or bearish on a particular week. But if we keep on waiting until the weekly bias is finalized, then the number of trading opportunities that will come to you will be very less. So I go one level lower to see what is happening in the daily. So if I look at weekly, what is happening in the weekly? The weekly prices have hit this particular area, which I believe is the higher area of the dealing range, which uh, one of the uh, mentors that I learned from also calls it as the premium range. And when we go into that price section, we are already bullish. My apologies, we are already bearish. So if we look at the daily, where is the daily structured right now in terms of the dealing range? So there is a gap on daily that is here, where I sense some amount of bullishness to come back from here, and on the bearish side we have a range here, right? I'll just mark that as red so that we know this is the range of bearishness. Now yesterday I was bullish for the only reason that there was this gap which was not fully closed. There was a very small minuscule gap that was left open, right? If you see, the range was only 3 points here, but that is still valid as a range of bullish area. Now the markets did drop well below that, right? But I never discount any area and stop using it if it just trades below that. I need a daily close before that, which is important for me to even discard this area for any further trades to be taken. So when the price hit the other day on Thursday, I had already made a note in my journal talking about that I will go only bullish on the Friday. And this is what I do. I someday I'll share the journal when we have enough monthly entries onto it. But basically I decide well before what kind of trades am I supposed to take on a particular day. So if you ask me sitting today, what would I trade on Monday? That depends on the opening because the ranges are very close at the moment. But if it does not open anywhere in this range or does not touch, price does not touch anywhere in this range and opens and drops lower, I will try and take only bullish trades for the day. Right. So that's the bias that I decide basis weekly and daily time frames. If I drop down to the 5 minute where I did the actual implementation of the trade, the prices had moved up in the morning after the opening and then they dropped lower. Again, they rose a little bit and then there was liquidity that was sitting below these, right? Basically, people who tried to go long here but were caught on the other side. And then if I drop down to the execution time frame where I have stipulated multiple times, the execution is always basis a market structure shift. So we had a low, a high, another lower high here and a lower low, and that lower high was taken out here, which basically is the market structure shift. Now what that means is that after this point, on a very short term basis, now we already saw that weekly was bearish, daily was bullish, so there is a conflict between two, and on such days you cannot expect explosive price moves. So I was prepared for the fact that a price move will be slightly faster or even very slow, and it will have a lot of consolidations in between, right? If I look at what I was targeting for the day, then I was actually targeting this particular price point for the day, right? So this high, I think it was 21908, was the high here, and that's what I was targeting for the day. However, uh, we did run up. Look at this big consolidation in between, right? This big consolidation is the fact that states that when the daily is bullish and the weekly is bearish, you have conflicting views on higher time frames, and that's where you see such consolidations forming. And even it after it ran up, it still made another consolidation from around 220 to 330. So that's 1 hour 20 minutes of consolidation. Here it was about 2 hours of consolidation. So almost 3 hours, 3 hours 30 minutes of the day have just gone in consolidation. Uh, Thankfully, when you're a seller, you don't have to worry about it because this whole thing has created a lot of time decay for me, and that was a very profitable trade at the end of the day. I was looking for this liquidity to be taken, but it never happened. And by the end of the day, I think at about 3:05 or 3:10, I had booked my trade, because after 3:15, what I've generally observed is that the option premiums start rising because they start adjusting for the next day's price. So that's where after 3:15 I don't carry anything forward because of the overnight risk as well, and because of the obvious fact that I'm not interested in any trades that go beyond an entire day. So that's about it. If today I'm asked about uh, what is my bias for Monday, it is obviously bullish, no doubt, but it depends if what is the opening, and then there is more decisions to be taken after that. That's all I had to cover. Again, I do want to point out that uh, options and futures are very risky instruments. Whenever you make the decision to buy something, sell something, please make sure that you hold yourself accountable and no one else who is teaching you or preaching you for any of the purposes. I hope this was insightful. You will see that in most cases I use the same trade setup. The only part that is crucial is the higher time frame analysis, which most people don't want to do, or most people find it very difficult. But higher time frames will generally give you a good direction to trade in, and once you have the direction, I think technique is something that is very common that I use on an everyday basis, and it has been working significantly well so far. So that's all I had for today. I hope this was insightful. Until I see you next time, I wish you good luck and good investing. Bye bye.